Two of the most popular provisions of the new CARES Act, the stimulus program, are the Paycheck Protection Program, the PPP, and the Economic Injury Disaster Loan, the EIDL. The question that seems to be on everybody's mind is number one, what's the difference between those two? And then also, which one is better for me? Which one should I apply for? And can I get both? Those are the questions that I seem to be hearing the most often. So that's going to be the topic of today's conversation. PPP versus EIDL. Coming right up. Here's a little shameless plug before I get started. If you haven't already done so, please take a moment to subscribe to our channel. Go ahead and subscribe to us here and hit that like button and that notification bell so the YouTube algorithm knows you like this type of content and so that you're notified each and every time we post a video here on the channel. Okay, PPP versus EIDL. Both of them are designed to stimulate the economy and to provide some relief to small businesses that are struggling through this time of emergency. But there are some differences that you should know about. So I'm going to take a moment today to go over some of those differences. I'm going to be relying on my notes. I got a lot of notes today to help me get through these conversations. So here we go. Okay, so the first has to do with the loan amounts, right? The PPP, you can borrow up to the lesser of $10 million or 2.5 times your business's average monthly payroll costs, not including independent contractor payments. So what does that mean? This is based on your 2019 cost, or if your business is really, really new, you can use your cost for the first few months of 2020. So these are two strengths of the PPP. The first is that the loan amounts are larger than the EIDL, right? And two is that some or all of the PPP can be forgiven, meaning that you don't have to pay it back. And we'll get into that in just a minute. Now, when it comes to the EIDL, you can borrow up to $2 million with the exact amount being determined based upon the amount of economic injury that your business suffered. The significance of the EIDL is that you should be able to receive an advance of the portion that you're going to borrow. You should be able to receive that in the form of an advance of up to $10,000, which is supposed to be advanced to you within 3 days from the date of application. Now, technically, it does say within 3 days from the date of receipt of the application. However, the application is electronic, right? You do it right online. So one would assume that the submission and the receipt happen basically simultaneously. The CARES Act provides that you can receive the advance of up to $10,000 even if you don't actually qualify for and receive the EIDL, the loan itself. And you do not have to repay the advance whether you receive the loan or not. This is why some people basically say that up to $10,000 portion of the EIDL really is basically a grant. Now, one thing to note, even though the CARES Act itself actually says up to $10,000, the SBA has now interpreted that and put out official language of their interpretation. They've interpreted it to mean that you can receive up to $1,000 per employee in the form of an advance. So for example, if you have 3 employees, they're really only going to advance you $3,000 because it's $1,000 per employee. So in order to receive the full $10,000 advance, you're going to need to have 10 employees. If you have 10 employees, you're probably going to be thinking about the PPP anyway, for reasons that should become more obvious as we go through the video. So how do you apply? For the PPP, it's going to be done directly through your bank, right? So what that means is you're going to go down to the bank, you're going to apply for the loan, and the bank is going to determine whether or not you qualify for the loan based on their own internal lending criteria. And let me just say this also when it comes to applying for the PPP, it's crazy out here. Some of the banks have already said that they've reached their capacity and they don't have the ability to lend any more money. Some of them have said they're no longer participating in the program at all. Some of the banks have said they're giving exclusive priority to their own clients that already have loans with them. So it's just ridiculous. This is so new and still evolving to the point where it's literally changing day by day in terms of the PPP, which brings us to the EIDL. See, this is done directly through the SBA. So that means that you can apply for the loan directly on the SBA website with no need to actually go down to a bank at all. That's a real feature. That's a real strong point for the EIDL. You don't have to go down to one of these banks out here, particularly with all the banks having varying criteria and varying procedures for actually processing the loans. Moving along, the interest rate, right? It's another feature in comparison of the two. The EIDL has an interest rate of 3.75% for for-profit businesses. For nonprofit, the rate is only 2.75%. That's pretty low, right? With the PPP, it's 1% across the board. Now, that's downright cheap money. That's almost free. A 1% interest rate for a loan, which can be forgiven in many circumstances. That's amazing, right? So we'll get to forgiveness later on. Loan terms. The EIDL is a 30-year loan term. The payments, however, can be deferred for up to 12 months. So it's a 30-year loan that you're going to take out with the EIDL, but you don't have to start making those first payments for 12 full months. Pretty good. PPP is a 2-year repayment term. So that's a very short window of time to repay the money. And again, we'll get to why that is. It has to do with the forgiveness. Keep watching. We'll get to that. You can defer payments for up to 6 months with the PPP. Interest will accrue for both of these loans beginning on the date that you take the loan out. So while you can defer it, just keep in mind that interest is going to be accruing while the loan is in deferment. But I mean, really, you're talking about anywhere from 1 to 3 to 4% interest on a loan. That's cheap money, right? Real cheap money. Eligibility. When it comes to these types of loans, they are for business owners, independent contractors, sole proprietors, et cetera, et cetera. With the EIDL, most small businesses will qualify. You have to have fewer than 500 employees. With the PPP, it's basically going to be the same, but you can have over 500 employees if you're in certain types of industries. Moving on to something that's a little more important here is permitted usages. In other words, what can you use this money for? When it comes to the EIDL, I'm going to read directly from the notes here. You're talking about fixed debts, payroll, related benefits, accounts payable, other expenses that arose because of the COVID-19 crisis, but you can't use it to refinance debt or to make payment on another SBA loan, to pay civil fines, to pay dividends, or distributions to partners or owners. In other words, for business purposes, right? You're supposed to be using this money to keep your business open, to pay for things that are directly related to COVID-19 and serve the purpose of helping you keep your firm open. Not using it to make distributions to yourself or to pay owners or to personally enrich yourself. The PPP, on the other hand, the focus is on payroll and things related to payroll. As we'll see, there's pretty much a long list of things you can pay. And again, it's such a long list. I'm going to read it directly from the notes. So we're talking about things that keep the focus on keeping your employees at work and honestly keeping the economy going. So what are we talking about when it comes to payroll costs with the PPP? We're talking about compensation in the form of salaries, wages, and commissions are considered payroll. That's awesome, right? So income that you're receiving in the form of commission. So all my realtors, that counts. Consider payroll costs for the purposes of this loan. Also, money paid for sick leave and vacation leave are included. Likewise, are contributions to retirement accounts, as well as money that you spend for health insurance, both for yourself and for your employees. Essentially, what you're going to do here with the PPP is take the yearly amount that you spend on payroll, you're going to divide that by 12 and multiply by 2.5, and that's the amount of your PPP loan. For all of my independent contractors, I know that everyone has the same question, right? I don't have payroll. I'm paid via 1099. I'm a realtor, or I drive for Uber or Lyft or something like that. Everyone's asking the same question. What about me, right? So for independent contractors, your own wages, your commission, your income, your net earnings, or similar compensation all count as payroll under the PPP. That's awesome, right? One thing to note, salaries and wages and commissions above $100,000 are not included in the PPP. So what does that mean? You're an insurance agent, a financial advisor, a realtor, someone out there like that. You made $125,000. So that top 25,000 is not going to be included in the amount that you figure for your PPP. So in other words, it's not going to count any amount that you made over 100K when you're determining how much you're able to qualify for under the PPP, right? Same deal goes for salaries of people who live outside the United States. So if your business employs people that actually don't live here in the country, here in the United States, then their salaries are not going to be included in figuring out how much you can borrow with the PPP loan. Okay, so what types of businesses are not included in the PPP, right? And again, there's a long list here. We're talking about domestic employers. What that means is if you have a housekeeper, a maid, a butler that works in your home and you're unable to pay them, you can't use the PPP to go out and borrow money to pay your maid's salary. That doesn't work. Number two, banks, insurance companies, and mortgage companies, lenders. You can't borrow money to then turn around and lend it. Number three is passive real estate businesses. So if you're a passive owner of apartment buildings, shopping malls, things like that, doesn't apply. Multi-level marketing companies. You pretty much probably could have guessed that one along with the next couple. Legal gambling, not going to work. Marijuana, you definitely knew that was going to be included in the prohibition. Private clubs that restrict patronage. You're talking about places that don't allow, places that are men only, right? You got a men only club, not going to happen. You got a club that's only for women, not going to happen. They're not going to be able to borrow money under the PPP. Churches can't borrow under the PPP. Strip clubs and sex shops are not going to be able to borrow under the PPP. And the same for lobbyists and speculators, not going to be able to borrow under the PPP. One of the things that I immediately thought about when I saw speculators, and it gives a couple of examples of people that invest in securities and things of that nature, is I was wondering, what about my house flippers? You know, my home flippers or whatnot. Yet to be seen, right? Next category here is collateral. Are you required to post collateral in order to get one of these loans? With the EIDL, the answer is no. You're not required to post collateral unless the amount that you're borrowing under the EIDL exceeds $25,000. With the PPP, no collateral is required. Moving along here, personal guarantee. With the EIDL, none is required for under $200,000. So as long as the amount that you're borrowing under the EIDL is 200 grand or less, no personal guarantee. The PPP, no personal guarantee at all. Loan forgiveness, right? That's the one everybody's talking about. In other words, do you have to pay it back, or can a portion of the loan be forgiven? With the EIDL, at most, $100,000 can be forgiven and does not need to be repaid. Above the $10,000, you're going to end up paying it back. With the PPP, loan forgiveness is available on a portion of the loan proceeds. If employers retain their employees for the covered period of time, which I'm hearing is 8 weeks, after 8 weeks, you can apply to the bank that you borrowed the money through. I was going to say from, but it's really not from, it's through. The bank that you borrowed the money through for forgiveness. You're going to need to keep like really, really, really good records to show what you use the money for when it comes down to that PPP applying for forgiveness, right? Only 25% of non-payroll expenses can be forgiven. So in other words, you're going to have to use 75% of the loan proceeds for payroll purposes. For the items we mentioned earlier that count as payroll items, you need to use 75% of the loan funds for those things in order for the entire loan to be forgiven. All right, so how do I choose between the two? How do I know which one is best for me and my business? In general, if your main concern is meeting your payroll and keeping your employees on staff and keeping them on the books, keeping them paid, keeping them happy, then you want to go with the PPP. That's the one for you. If your main concern is other debts, non-payroll debts and expenses, then you're going to want to consider the EIDL. If you need more than $2 million, you're going to have to do the PPP anyway. If you have more than 500 employees, you're going to have to do the PPP anyway. Although if you have a business that large, you probably have existing lending relationships with banks already. So I'm not sure that either one of these loans are going to particularly excite you if you have that many employees. Moving along here, can I get both? I've probably been asked that question just about as much as the other. You know, which do I choose? Can I get both is the question. The answer is yes, you can get both. You just can't use both loans to cover the same expenses. For example, let's say you're a realtor and you don't have any employees at all. Your monthly payroll is $5,000. You apply for the EIDL. But you don't get a $10,000 advance because you don't have any employees, right? You only get $1,000, which again, the rule is $1,000 per employee when it comes to that advance. You apply for and receive $12,000 from the PPP. You spend the $12,500 on allowable expenses. You do it right. You do the right thing. And you're not required to pay back the $1,000 you received under the EIDL, because that advance or that grant is not required to be repaid. Now, 8 weeks later, you're going to request loan forgiveness under the PPP, and you are forgiven $11,500 of the $12,500 that you borrowed. So you got total forgiveness of $12,500, but $1,000 of it was offset by the EIDL advance or grant that you got initially when you first applied for that EIDL. So that's it, man. If you haven't already done so, please take a moment to subscribe to my YouTube channel. Smash that like button so the YouTube algorithm knows you like this type of content. Please hit that notification bell so you can be notified each and every time we post new and exciting content here on YouTube. Also, check us out on our other social channels. Go ahead and like us, like Legacy Tax and Financial Planning on Facebook. You can find us on there. And you can follow me at Ice Cold Tax Pro on my Instagram channel. All right, guys, that's it for this week. Thanks for talking. Talk to you soon. Bye-bye. Did I say thanks for talking? I mean, thanks for watching. What am I talking about? Anyway.